Yeah. So this is the chart I did today.
Okay.
Can you see my Can you see my cursor?
Yep, we can. Yes, I can.
Okay, cool. Are there pointer tools in this thing? Yeah. Let me see. Pen, spotlight. Okay. Highlighter. That'd be cool. All right. So let's just talk to markets for a second. I mean, Bob, thanks for having me. I just got to give kudos again to Bob being on CNBC with Kramer. It was a long time coming, and not a guy that's more deserving than seeing Bob on talking the charts with Kramer. So that was a big week, and it's huge. All I got to say is it's awesome. Congratulations again. So here's today's chart, and I'll just review a couple charts, but this is today's when we're making down in this 1449 area, right? And if you go back to when Bollinger Bands, they're very dangerous, and both on the upside and the downside. And if we go through these charts, you can see that the market is trying, back in August, you make this W formation, right? So if the market is on this left side of the W, we're here. So, Bollinger Bands don't lie. So I don't know when it's going to happen. I know it's probably going to be within, call it 4 days from now, 5 days from now. You're going to make a killing on a swing long back into, at some point, your chart is going to look back up into this 1390 area to form that W. And so you're going to have that hopefully you have a higher low, and it goes like this. There's not a time, the market never spends all its time on tops of bands and bottom of bands. And what I was saying earlier on the IM, that back up here, when we went, this blue line, if everyone can see it, we went basically band to band to band. And this was, on the IM, right here, I'm like, put down the Corona. Okay, this is, I heard Bobby saying, my own a boat story. Owning a boat, I called Bob a couple of years ago and I said, do you own a boat? And he's like, no, why? And I said, well, what you just felt was the first side of a wake. He goes, what are you talking about? I said, well, if you own a boat, you understand that when something hits you and you're not ready for it, it comes in a series of twos. I mean, if you're in one wake, there's another side of it, and it's depending on what side you're on. So this area was put down, the Coronas, and right in here. This volatility is where things, the tectonic plates were starting to shift. And you had this double weekly top up here. This is 1466, 1467. Those are just as significant as this 13, the 1353s and 54s that were tests not back in August, but I'll bring up another chart in a second. And so when you come down to these bands, you got to buy these punches, okay, when they punch, because you're going to have reversion to the mean just as much as everyone can see this cursor. This is where you started to punch outside of the top of the band. So had you laid some out up here, 1460 to 65, when you were punching, what that means is statistically you cannot trade above 2 standard deviations for very long. It lasts normally about 2 to 3 days, and it normally leaves a candle. And so arithmetically, mathematically, you can't stay down here in this area for very long without having reversion to the mean and having some relief off the bands. Now, can it happen where Apple trades, you know,